Hi there, I'm Anumil Akbar and this is Mr. Sebastian, founder from Sharp Focus, and welcome to the leading trading program DCFX US stock. This event was accompanied by WPB. And today we are going to discuss about GDP, the Fed and the Apple stock. And it's a hot topic. How will the market reaction? So what's happening, Mr. Sebastian?
So in the since last time, there's three big news coming out. Of course, the GDP, so the economy. The US is the biggest economy in the world, so the GDP is a very important number for the first quarter. And then we have the Fed meeting, the Federal Reserve Central Bank meeting, and then the decision about the interest rate. Obviously very important for the market. And then the third news is about Apple. So we've been getting the quarterly result from all the company, and then last night is Apple, and Apple is the biggest stock in the world, so that's very important news.
Yeah, okay. So for the first one, news, GDP.
The GDP, so in the first quarter, I have to mention that for me, I always look at GDP in terms of the dollar value, GDP. Because when we're investing in the company is making the sale, the profit, the cash flow in dollars. It's including the price and the volume together. So it makes sense to me that we look at the dollar GDP, which you call the nominal GDP. Many people, they look at the real GDP, which is only the volume. But to me, it's better you look at the nominal because that is volume and price, and that is related with the company. So in the first quarter, the GDP is still growing very strong. So 8% compared with a year ago.
8%?
Yeah, so it's still very strong. That is from this year to last year. There's another way to measure. If we look at fourth quarter to first quarter and then multiply by 4 to get 1 year, then the growth is a little bit slower. So it's about 5.5%, which is still good. So if you go back to 2018, 2019, the growth is like 5.5%, 6%. So the 8% is because in 2020, the economy collapsed, right? So then we had the fast growth because of the collapse before. Now the growth is coming down, but that's normal. And it's coming back to where it was before 2020. So it's good. It's a positive number.
Is it a good result?
Yeah, and it's also good because slower growth, meaning that the interest rate, if the growth is slower, it should be the interest rate can come down.
Okay, correct me if I'm wrong, but didn't the Fed just raise rates again?
Yes, so that's a bit of a mixed signal. But the Fed is so they raised the interest rate from 4.75 to 5%, and I think it's expected. But to me, it's a little bit not quite the right decision, I think. I also noticed Elon Musk is making a comment. He made a tweet saying that he thinks the data the Fed is using to make their decision has a lot of latency, meaning it's lagging, it's late. And I agree with him. Because if we look at the inflation, remember we discussed before, inflation was 9%, now it's 5%, maybe this month will be below 5%, so it's coming down. The economy is a little bit slower, the growth, so I think the interest rate should be coming down, not going up. And then also if we look at the market, the bond yield for the government bonds is 3.5, even below 3.5% are coming down. So the Fed is 5, the government bond yield is 3.5. So the signal to me means the interest rate will be coming down in the future, which should be good. So I'm not worried about the Fed raising the interest rate.
Oh, you expect lower interest rates from the Fed?
Later, yeah.
Later, okay.
They are lagging behind. They are slow.
Okay, for the third news, how are the results of Apple stocks?
Yeah, well, this, of course, is a very important number. Apple is the biggest company, so the earning of Apple is very important. And it's good, I think. It's very good. I always look at the cash flow. So that, to me, is the most important. Because when we are investing, we want to get the cash flow. And so it's better for us to invest in the company which has the biggest cash flow. So that we can get the cash flow from the company, from our share in the company. And Apple has the biggest cash flow by far, which is why it's the biggest company, biggest stock. And then in their latest results, the cash flow is very strong. So if you go back 2021, Apple cash flow is $90 billion.
90?
Yeah, for the calendar year.
Oh.
So Apple result is calendar year, is their fiscal year is ending in September, but I'm using the 12-month January to December. So 2021, it was 90 billion. 2022 is 100 billion. And then the latest result for the last 12 months is 113 billion. So 90, 100, 113. And then if you just look at the latest quarter, multiplied by 4, it's 124 billion. So Apple cash flow is still rising and still very strong. And that's amazing because that is enough to give the yield, the dividend yield, like 4%. So still 4 to 5%, still attractive for Apple.
It's attractive for Apple stocks. Okay, to finish, what is the conclusion of all these 3 important news?
Yeah, I think to me it's good. I mean, the stock market went down after this news. So after the GDP, after the interest rate went down. But I think last night after Apple result is starting to go back up again. So maybe this is a good opportunity. So if I look at the data, the GDP is still strong. Yes, the Fed increased, but I think the Fed will cut the rate soon and maybe sooner than they expect. And the Apple result is very strong. So it should be a good opportunity, I think, to buy the stock now because the market came down. The market should be going up again, I think.
Okay. Thank you, Mr. Sebastian, for joining us today. You give about the insight about the Apple stocks, GDP, and the Feds. And thank you for you all. And I want a disclaimer for derivative trading and other leveraged financial instruments contain risks. Please pay attention to managing risks. Don't forget to follow our social media. Thank you for you all. Thank you for watching. Happy watching, happy trading. See you and bye-bye.